guys so much for tuning into today's live stream. I started it a little bit late today just because I had to wait until my my live stream on this account was allowed. So, oops. Here we go. So this is a new account that I created, so hopefully it runs well. But yeah. Let's see here. Okay, everything should be running smoothly now. Coming into today's price action here, I do want to draw your guys' attention to how we created this. I do want to say that we did retrace back inside this daily dealing ranges discount level, right? So from this daily swing high here, so let me make this a borderline. So this is a daily swing high, right where this little gray line is. Oh, whoops, you guys can't even see it. So there's a dealing range here on the daily time frame, right? So from this swing high here, I'll make that a blue line and make it a little bit bigger. So that's a daily swing high, and this is a daily swing low. With the way that we created those two swing highs, right, or swing highs and swing lows, there is a dealing range, and I want to draw your attention to the discount or the premium level of this dealing range. So a characteristic of a dealing range is that you're able to get the equilibrium level, and ICT has introduced this idea of OTE, but I'm not going to go over OTE here. So if you guys take a look, prices as if there are sellers here in this market, right? So yesterday we sold off a decent amount, and there were a lot of news with this. There is this called DeepSeek, and people speculating that this new AI company is the reason why the NASDAQ tanked so much. Well, NASDAQ tanked because NVIDIA tanked, and just a lot of the tech companies tanked. But yeah, yeah. So, like I said, we sold off a decent amount yesterday, right? So if there are still sellers present in this market, they are going to want to sell in premium, right? You want to sell at a higher price. So like I said before, from that swing high to that swing low, there is this premium level. And look at the way that we wicked right above the equilibrium. Do you guys see that? We wicked right above the discount or the equilibrium level and wicked into premium. And now, if we begin to sell off, it makes sense for us to sell off, right? So that is something that I do want to draw your guys' attention to, is that we did trade back inside equilibrium or premium the London session during the London and Asian session today. And I don't necessarily have a daily bias coming into today, because I want to see how we create this daily fair value gap here. So with this massive expansion move lower here yesterday, I'm anticipating for some sort of fair value gap to be created, right? So if we consolidate today, we could create this daily fair value gap. And with the creation of that fair value gap, it depends on if today's candle's closing price is below yesterday's low. If we can close below this blue line, then that means I'll treat this daily fair value gap that we create as a breakaway gap. But if we don't close below this blue line, which I am anticipating, I don't see us trading. How many points is that? 700 points. I mean, we could, but I'm not anticipating 700 points today. But I mean, I wasn't anticipating 1,000 points yesterday, and we actually moved 1,000 points, which is kind of insane. But going back to the actual charts here, I am anticipating some sort of daily fair value gap to create, and I'm not anticipating, like I said, 700 points. So today I don't necessarily have a bias. I would go onto the intraday time frames, such as the 4-hour, the 6-hour, the 8-hour, or the 10-hour for some sort of bias, right? Some sort of higher time frame bias, not necessarily a daily bias. One thing that I do want to pay attention to too is, so there's a daily dealing range, right? But if prices is fractal, then that means there is dealing ranges on literally every single time frame. So on this 4-hour time frame as of right now, and this is the current 4-hour candle, by the way, with the way that we're currently trading here on that 4-hour candle, it appears that we're most likely going to create a down close candle, and we're going to create a swing high. So this swing high right here to this swing low, there is a dealing range, and some characteristics of a dealing range, there's equilibrium, and equilibrium essentially separates premium and discount. So if we're going to seek lower prices here, if we're going to want to seek lower prices, my minimum target here is the discount level of this dealing range right here, and that is at 21.92. Oh, 21.092. And that for me would be my morning objective, is if we are going to seek lower prices, then that's like the bare minimum fruit that I would be targeting right there, is the discount level. And yeah, I would say that's my bias coming to this morning, not necessarily a daily bias. But yeah, I am feeling a little bit under the weather, to be honest, so just bear with me. Alright, let's take a look on the hourly time frame. Yeah, it looks like we are, I mean, the way that we're closing here on this 8-hour candle is suggesting to me that we're most likely going to take out the 8-hour candles low. But why else should we be continuing lower, right? That's the question. We should be continuing lower to retrace back inside this discount level. And funny enough, there's a sell side level right here at right next to the equilibrium level. So if we're going to be expanding towards sell side here, that's another reason here too. So that's sell side liquidity, by the way. But yeah, my main objective here coming into this morning, if we are to see lower prices, is the discount level. Is I want to see prices expand lower towards this little blue line right here. And let's see. Today we have CB consumer confidence at 10 a.m. Eastern time, so that is pretty crucial. That's a pretty important news event. I wouldn't say it's the most volatile, but I mean it is a red filter news. But yeah, that's gonna be all for, I guess, my analysis here coming to this morning. Like I said, we have already retraced back inside the daily dealing ranges premium level, and with the way that we're kind of respecting it here and seeking lower prices, I'm going on to the lower time frames. There's a 4-hour dealing range. I want to see us retrace back inside the discount of that dealing range. So notice how I'm kind of like putting all of these time frames together. There's a reason why prices moves, right? The reason why we could be seeing lower prices here is because we have already traded back into the premium level of the daily dealing range. So with the move lower here, we could seek for discount levels on the 4-hour dealing range. I do want to go over some of the pros and cons here with you guys from last week. I'm not too sure why my camera is froze. It's kind of, yeah. Let me see if I can fix that. Sometimes my camera is like, it does act up. It's weird. Let's see. Nope, still doesn't work. How about I open up the camera? Wait, it literally works here. I open it up on. Okay, it just. Okay, it's just glitching on OBS. I actually don't know, and I don't feel like resetting my whole the whole OBS system. Okay, so going into the pros and cons here from yesterday or from last week. Every single trade that I took last week, and I'll review one of the trades here a little bit later, is that they all met my requirements, right? In every single trade that I take, I always look for a higher time frame objective. What's the reason why prices wants to continue lower or higher? A model. A model is essentially a lower time frame relative to the higher time frame that I can take or that I can align with the higher time frame objective, right? So, for example, on the 4-hour time frame right now, right? Based on the 4-hour dealing range, I want to see us retrace back inside the discount level. So a model would be like a bearish candle on the hourly time frame. Notice how I went from the 4-hour to the hourly. I didn't go from 4-hour to the 1 minute. There's no there's no correlation between those two time frames, right? 4-hour to 1 hour is a large leap. Like, I'm missing information from the hourly, the 30-minute, and the 15-minute if I go straight from 4-hour to the 1 minute. So if you guys are trying to if you guys can understand what I'm trying to explain here. So that's like saying I'm going on from the monthly time frame to the 15-minute time frame. Notice how I'm skipping over the weekly time frame, the daily time frame, the 12-hour time frame, the 8-hour, the 1 hour, and straight to the 15-minute. There's a lot of pages that I skip between the monthly to the 15-minute, which is why I say the word relative. So like I said, this 4-hour time frame right now is suggesting to me, if we were to close right now, I mean, anything could happen in 10 minutes, but if we were to close right now on this 4-hour time frame and create this 4-hour swing high, I could anticipate for us to retrace back inside this dealing range. And the model has to be like on the 1-hour time frame. And I want to see a bearish closing candle on the hourly time frame for me to be able to take it. So going back to the pros and cons, every single trade that I took last week, I was able to explain and identify all of those little characteristics of a trade for myself. And that just, because I'm taking the same, not the same trade, but the same style, right, where I require all of those 3 components, that just practices discipline and consistency, right? If my models kind of look like this, where sometimes it might look like down here, and then it just is not consistent, right? But consistency, is like, consistent every single day, and that's what's going to help you on the long run. You might get a good winner one day, and then you take a trade that doesn't follow your strategy, and then you just bam, and then maybe you take another one that just gives you this, and then you take a losing trade because you didn't follow your strategy, and it's really not consistent, right? So yeah. So like I said, being able to identify those requirements or something that I hold highly whenever I trade is those requirements have to be met for me to take a trade. If they don't, I'm not going to take anything. So it is so now it's 8:50, or I guess 8:50 Central Time, but 9:50 Eastern Time. I do want to be active here in front of the charts. And there is this one thing that I did go over yesterday, and it's time frame alignment, right? So this 4-hour time frame right here is suggesting lower prices, right? Just the way that we're closing here on this 4 hours. If we were to close right now, I can anticipate that we want to see lower prices. I want to see this 4-hour low be taken. If I were to go onto the hourly time frame, I could say about the same idea too. That lower prices make sense. But what is happening on the 15-minute time frame? So keep in mind, 4 hours suggesting lower prices, right? What is this 15-minute time frame suggesting us? Just the way that this 15-minute candle is closing. It's telling me that we're seeking higher prices. There's no alignment between the 15-minute with the hourly, right? So now notice how this hourly candle is beginning to form too. Because the 15-minute here is rather bullish here compared to the 4-hour, and it's affecting the hourly time frame too. So now, like, you guys can kind of see what I mean by time frame alignment. If this 15-minute candle were to be bearish, then I can anticipate that within the next 15 minutes we should complete the 4-hour objective. But here, 4-hour lower prices, 15-minute higher prices. So for me to even take a trade, I have to align those time frames, and there's no alignment right now. It's like one's going up, one's going down. You don't want to be you don't want to be a part of those types of trades. But yeah, so right now, even if we were to close right now, I wouldn't know. I wouldn't know what prices wants to do here, to be honest. But yeah, let's take a look at ES. So did ES have SMT here? No SMT, no SMT just yet. Okay, so I mean, today, like I said before, on the 4-hour time frame or even the daily time frame, I'm not really anticipating for us to take out yesterday's low or even yesterday's high. I am anticipating some sort of like I said, consolidation, because if we consolidate today, we're going to create a daily fair value gap, and I'm anticipating for that fair value gap to be rebalanced. But that's a little bit too much. I guess seeing too much in the future here, but let's see. Yeah, I mean, we still have 5 more minutes left. We still have time. Let's take a look at how the 8-hour candle is closing. 8-hour candle. I'm not gonna lie, it's beginning to look a little bit iffy for bearish. For me to say that we're going to seek lower prices. Yeah, I don't know. I really don't know. This 4-hour candle is like on its last hold, like I can't anticipate lower prices if this hourly candle is looking like this. So if there's something that I'm not clear of, or I'm not completely sure of, I mean, you can never be sure whenever you're in the markets, but if it's not something I'm confident in, the easiest solution to that problem is to sit on your hands, literally to do nothing. Just wait until prices tells you that, hey, it's now time for you to it's now time for you to participate. But as of right now, it's like you can throw whatever up that's up in the air, and it just, yeah, I don't know. Not probable right now, not highly probable. Like yesterday's AM session, I thought we were going to have continuation of the move lower, but we actually just, let me see how much points we moved up. We moved 650 points yesterday to the upside. Kind of crazy. And we moved 1,000 points to the downside. Absurd. Yeah, it's actually crazy how much points we moved. I do want to take a look at Tesla though. I want to see higher prices on Tesla, to be honest. Like, I actually want to buy stocks in Tesla, but a share in Tesla right now is like, yeah, 380. It's a lot of you need a lot of leverage. Let's take a look at Nvidia. Nvidia is, well, it's actually seeking lower prices right now. Oh, whoops. Let's see, 12-month time frame. Like an efficient, if we were to use like ICT concepts here, it would have been efficient to like maybe buy somewhere here, right, in this fair value gap. But like with the way that we're trading now, it just kind of yeah, like not too sure. What's another like popular I don't know what's another popular tech company. But like I said, the reason why the Nasdaq is tanking so much is like Nvidia, it just gapped down decent amount from yesterday, or from, yeah, actually yesterday we gapped down a decent amount. We gapped down, is that 20 points? That looks like 20 points here. Yeah, about 20 points. Wow. Wow. The question is if are we going to respect this fair value gap that we're possibly going to rebalance. Alright, back to the NQ charts here. So we're about to close here on this 4-hour candle, and I'm not confident in bearish pressure. I'm not confident in lower prices, to be honest with you. It's rather yeah, with the way that we're closing here on this specific candle, I don't know. I'd rather just sit on my hands coming into this morning. Really no need for me to force anything here. And we're about to have consumer confidence, so let's see what happens. So 15-minute time frame, and I'm sure that 15-minute candle closed bullish. Yeah, bullish 15-minute closure, and this hourly candle closure too. Oh, if we trade past this swing high here on the 15-minute time frame, that could be considered a hourly market structure shift, because this hourly swing high is basically us retracing into a 1 hour fair value gap and respecting it, and we traded lower. But if we break past it, that would indicate to me that, hey, we just had a market structure shift, and something like that could happen, like something like this could happen. But yeah, we'll see. Like I said, I don't want to force anything into the markets. It's kind of, I wouldn't want to force anything here. Let's see if we retrace back inside this dealing ranges equilibrium level, from this swing high to this swing low. Okay, so that's about it. So we did not trade back inside that daily. So notice how there's two daily swing highs. There's this one, and then there's this one. So the second one, this one, the red dealing ranges, the red line daily dealing ranges premium level, we did trade back into. But the blue daily dealing ranges level, premium level, we did not trade back into. So that's something that you do want to note as well. So yeah, I mean, we did do that. So seeking higher prices here, I mean, it's a lot of like, yeah, jumbo wumbo. So going back to the pros and cons, there's nothing for me to really look at here onto the charts. Second pro here from last week. There was a trade here last week where every single requirement was met, right? I had a higher time frame objective, I had a model, and then I had an entry pattern. But as I entered the trade, NQ failed to take out its respective models low, whereas ES did. So the trade that I'm talking about here is it this one? Oh yeah, it was this one. So ES here, right when we opened up at 12 p.m., right, we took out this 15-minute low. But notice how as soon as we opened up at 12 p.m. here on NQ, we failed to take out this 15-minute low. We traded up higher, failed to take it, and then traded up higher, and then took out the 15-minute low. I wouldn't have taken this trade because ES had already taken out its low right at 12, but we did not do that right at 12 here on NQ. So there's a misalignment, or not as misalignment, but there's SMT there. And I don't, for me, with that trade is that if there's SMT between the markets, I don't want to be a part of it, right? That's not something that I want to be in whenever the conditions are like that. So it's just like, even though all of those requirements were met, being able to practice discipline and understand that like not everything is guaranteed, and that if there's SMT, just sit on the sidelines or like move break stop loss to break even, and as simple as that. Because SMT indicates that there's been some sort of manipulation in the markets, and you don't want to be a part of manipulation. Third thing, time frame alignment. I kind of went over that already, but once the lower time frames are in alignment with the higher time frames, and vice versa, that's when you're gonna get the most probable trades, right? Whenever lower time frames are suggesting the same idea as the higher time frames. What can I continue to work on? There were a couple times where last week where I hesitated to, I guess, click the button even though all of the requirements were met, and that just shows you, and that shows me that I'm lacking in some, I guess, execution wise, because if all of the requirements here for my trade is met, I should be able to take it. I should be able to just click the button and allow the outcome to play out, right? Whether that's a losing or learning, I have to completely accept the outcome. And there's no, you can't run away from the outcome, right? That's just something that's objective. It will be there, right? And but yeah, the only thing that you can control in this sense is that how you execute, and I need to be able to execute when all of those requirements are met. And it's okay for me to like move my stop to break even if there's SMT, right? That's something that actually did occur, the SMT did, and I'm just, if that happens, then this. So wait, someone's calling me. Give me 1 second. Hello?
Hi, Ken?
Yes.
Okay, and it's Ken, I'm not sure how to pronounce your last name, Kale?
Yeah, Gal.
Cal?
Yeah.
My name is Julie. I'm calling from Discover Card's Customer Protection Services Department. The call may be monitored and recorded. So the reason for my call today is Discover Card is requesting you to complete identity verification. One of the options we have is to upload your identification and selfie to us. For security purposes, we do need you to call back in order to send you a link to complete the verification. We won't call and ask for personal information for fraud verification purposes. So I did send you an email. This email is going to include instructions for the action we need you to complete. You'll need it's 9 p.m. Eastern.
Yep. I am back. So, like I said, going back to the pros and cons here, being able to accept the outcome is something that I have to just like work on. And like I said, the only thing that I can control in this case is how I execute on my trades, right? The second thing here, practicing mindfulness, is what you're currently doing in alignment with your goals and your values, right? That's a question that I should always refer back to whenever I have any, if I need clarity of in anything. Continue to align your thoughts and actions with your goals and values. Some improvements here, like I said, to continue to take consistent models. Require those higher time frame objectives, models, entry patterns, and if all of those requirements are met, right, don't be hesitant to take the trade. There's no reason for you to not take a trade, right? The outcome, like I said, is not in your control. That's something that's up to whatever the algorithm wants to do. Your objective is simply to execute on your strategy. Second thing here, pay close attention to SMT. No matter how good a trade looks, if there's SMT here, if there's SMT between indices, you don't want to be a part of it, because that just indicates that there's been manipulation and the conditions aren't probable. Third thing here, maintain a level of awareness over your thoughts and actions. Like I said, continue to practice that mindfulness throughout your day. Just one step, right? As long as you're able to, refer back to your values and goals, the path that you're gonna take you'll be okay, as long as you're aware of what you're doing. And or as long as you're aware of what you're doing is in alignment with your values and goals. If they're aligned, then you're on the correct path. And aggressive trading here. So that's gonna be all for the pros and cons. I do want to go over one trade here from last week, so I'm not entirely too sure which one I did go over here. I think I believe I went over this. I'll go over. Man, is it? Here, I'll go over the one that was yesterday's. So yesterday here, coming into the morning session, I do want to draw your attention to how we closed here on this 4-hour candle. So with the way that we closed here on this 4-hour candle, this one right here, notice how we create this 4-hour fair value gap. It's not a large fair value gap, but the fair value gap is there. And with the way that we created this fair value gap, it's indicating to me that we're most likely going to rebalance this inefficiency, right? So this is the higher time frame objective, is to retrace back into that 4-hour inefficiency. I do want to see. Okay, so we already retraced back into premium there. So my higher time frame objective is on the 4-hour time frame, and it is to rebalance a inefficiency. So going on to, like, what am I going to base my, or how am I going to align myself with that 4-hour objective, is I'm going on to the hourly time frame, and I'm noticing, hey, this hourly high here is the same high as this 4-hour high. So that means that we should complete the 4-hour objective within the next hour. Just because, like I said, the hourly high is the same as the 4-hour high. And this idea is called scope. Scope allows you to understand when prices should complete a certain objective. And in this case, we should complete the 4-hour objective within the next hour. So my model here is actually based on my model here is based on the hourly time frame, and then going into the actual charts. So I don't actually want to go there yet. And then I'm noticing, okay, well, this 15-minute high here is the same high as this 30-minute, and the 30-minute high is actually the same as the hourly and the 4-hour. So now I'm thinking to myself, okay, we should complete this 4-hour objective within the next 15 minutes because of scope, right? They're the exact same highs. But whenever I try to go find an entry pattern for the 15-minute model, notice how there's no fair value gaps here. So let's see, we open up at 10, and I'm looking at the charts here. Man, there's not a single fair value gap in this leg up that I can use to target higher prices. So the higher time frame objective is there, right? The model is there, but there's no fair value gap. So I didn't take this entry. What do? I wait. So now that give me a second. Okay, so now that we've closed here on this 15-minute candle, right? This is the 15-minute candle. Notice how we create this. Notice the way that we created this 15-minute candle. Its closing price is here, the red line. And let's take a look at this 15-minute fair value gap. This 15-minute fair value gap. Notice where its high is. This is that high. So because the red line here, because we close below the blue line, I can treat this fair value gap now as a gap that gets rebalanced. Initially, when we first created it, we closed up here. That's the initial here. So initially, we closed above the blue line on the purple line. So that means I have to treat this fair value gap as a breakaway gap. But notice how we consolidated basically the first 15 minutes of the 10 o'clock candle, and then in 15 minutes after 15 minutes passed by, we closed below the blue line. So now I can treat this 15-minute fair value gap as a gap that gets rebalanced. And if it gets rebalanced, that means I can use it as an entry pattern. So now let's go back to the hourly time frame. I don't want to go here just yet. So 4-hour higher time frame objective is to rebalance a inefficiency. Hourly model. So now I can no longer use the 15-minute time frame because, like I said, the 15-minute time frame isn't in alignment with my current objective anymore. So I have to rely on the hourly model. So higher time frame is on the 4-hour, models on the hourly. Now my entry pattern, 4-hour, hourly, 15-minute fair value gap to enter the trade of this trade here. So I would have taken something like this because I'm anticipating for us to respect this 15-minute fair value gap to continue higher. But the reason why I didn't take this trade here is if we look here on ES, we have already completed its objective, or its daily objective, or not daily objective, but hourly objective here, right here. So this is its hourly swing high, and notice how we passed that high here. So look, we took out that hourly high already, but on NQ we did not. So there's actually a 15-minute SMT here, which caused me to not take this trade. But I mean, everything checks out, right? We had, like I said, we had a higher time frame objective, we had a model, and then because 15 minutes has passed, we ended up using the 15-minute fair value gap as an entry pattern. But the reason why I didn't take this trade is because there was SMT between ES and NQ. But yeah, going back to the actual live charts right now. I don't know. I really don't know. I don't want to force anything here. But yeah, that's gonna wrap it up for me for today on the charts at least. Oh, I do want to go over the Stoicism quote here for today. And let's do daily. Should we do Taoism? Let's just do daily motivational quote. So the daily quote for today is Let's wait for it to generate everything first. All right, so let's see. Your life does not get better by chance, it gets better by change. Breakdown. Take ownership of your life. Improvement requires intentional action. Waiting for things to happen won't lead to growth. Your decisions and efforts will. There is a book I'm currently reading, Maximum Achievement, and one of the chapters goes over responsibility, right? And it basically it just goes over and over and over the idea that you are responsible for your life. There's no one else that is. You can't depend on anybody else but yourself to, I guess, get you through things. And it kind of just reminds me of what this quote is trying to tell me right here. Embrace change. Change is often uncomfortable, but it's a gateway to progress. Staying in your comfort zone prevents you from reaching your potential. And, there's a lot of these online, mentors. This is like something that's always been said here. David Goggins, right? If you're comfortable, then you're not going to experience any, difficulties for you to learn from and grow. Growth only stems from failure. You don't grow whenever you, you don't grow if you don't fail. Third thing here, be proactive, not reactive. Instead of passively hoping for circumstances to improve, take deliberate steps to create the reality that you want. So for me today, what's one small change you can make today that will lead to a better tomorrow? For me, that is to constantly align my thoughts and my actions with my values and goals. Actively do that. One thing that I am going to do today is apply to 5 internships, review finance notes, and yeah. And I believe with that, that's going to wrap it up for today's live stream. I've gone over basically everything that I did want to go over, so thank you guys so much for tuning in, and until next time.